When did you last actually look at your payslip? Not glance at the final number. Actually read it. Every line, every deduction, every figure above the amount that lands in your account. If you were like most people, the honest answer is never. And that is costing you money right now. HMRC, the UK tax authority, estimates that millions of people are on the wrong tax code at any given point in time. In the United States, the IRS processes billions in tax overpayments every single year from people who simply did not know they were paying more than they owed. This is not rare. This is not an edge case. The overwhelming majority of employed people are handing over money they are legally entitled to keep. And the reason is simple. Nobody ever taught them how to read the document that tells them exactly where their money is going. That changes right now. By the end of this video, you will know exactly what every line on your payslip means, what to check immediately, and what to do if the numbers are wrong. Your payslip has two headline figures: gross pay, what you earned; net pay, what you received. Most people only ever pay attention to net pay because that is the number that hits their bank account. But the gap between those two figures is the most important story on the entire document, and almost nobody reads it. Take someone earning £35,000 a year. Their gross monthly pay is roughly £2,917. Their net pay after deductions lands at approximately £2,200. That gap, £717 every single month, is nearly £8,600 a year, leaving their account before they ever see it. The question is not whether those deductions are fair. Some of them are non-negotiable, and some of them you are actively benefiting from. The question is whether every single one of them is correct. Because if even one of them is wrong, and for millions of people at least one of them is, you are losing money silently every single month. Here's the exercise. Take your annual gross salary and divide it by 2,080, the number of standard working hours in a year. That's your real hourly rate before deductions. Now do the same with your net pay. The difference between those two hourly rates is the real cost of every hour you work. Most people find that number genuinely shocking. It's supposed to be. On your payslip, there is a tax code. In the UK, it looks something like 1257L. Most people have never looked at it. Fewer still know what it means. This is a problem because your tax code is the single instruction that tells your employer how much income tax to deduct from every pay packet. If it is wrong, and it is wrong for a significant number of people, you are either overpaying tax every month or underpaying it and building up a debt you do not know about. 1257L, the most common code in the UK, means you have a personal allowance of £12,570. That is the amount you can earn before income tax applies. But codes change. They change when you start a new job and your employer uses an emergency code. They change when you have multiple income sources. They change when HMRC makes an administrative error. And when they change incorrectly, nobody automatically tells you. The fix is straightforward. Go to the HMRC website or the equivalent tax authority in your country and check your tax code is correct for your circumstances right now. If you have been on the wrong code for any period, you can claim back what you are owed going back up to 4 tax years. For some people, that is thousands of pounds sitting unclaimed. Yours, already earned, just never collected. Below your tax deduction, you will typically find 2 more lines that most people scroll past: national insurance and pension contributions. Both matter significantly more than most people realize. National insurance is a percentage of your earnings that funds state benefits, including your state pension. The critical thing to understand is that your national insurance record directly determines what state pension you are entitled to in retirement. You need 35 qualifying years of contributions to receive the full state pension. If you have gaps in your record from periods of self-employment, living abroad, or time out of work, those gaps cost you in retirement. You can check your national insurance record on the government website and pay voluntary contributions to fill any gaps. Most people have never done this. Most people do not know they can. Your pension deduction line is where the conversation from last week becomes real. That number on your payslip is the amount leaving your gross pay before tax, which means every pound in your pension costs you less than a pound out of your pocket because it reduces your taxable income. A basic rate taxpayer contributing $100 to their pension effectively pays $80 for it. The other $20 comes from tax relief. If your employer is matching contributions and that match line does not appear on your payslip, check immediately. That money is owed to you and it should be visible. Pull up your most recent payslip right now. 4 things to check. 1. Confirm your tax code. Look it up on the HMRC website or your country's equivalent and verify it matches your actual circumstances. If it doesn't, contact HMRC directly and request a correction. This takes 15 minutes and could result in a 4-figure refund. 2. Check your gross to net gap. Understand every line between those 2 numbers. If there is a deduction you do not recognize, query it with your payroll department immediately. 3. Find your pension contribution line and confirm your employer match is showing. If it is not there or the numbers do not add up, escalate to HR. This is your money and you are entitled to transparency about where it goes. 4. Check your national insurance record online. Look for gaps. If gaps exist, calculate the cost of filling them versus the state pension increase you receive. For most people, it is one of the highest return financial decisions available. This entire process takes less than an hour. For a significant number of people watching this video right now, it will result in money coming back to them that they did not know they were owed. That is not a small thing. That is your money. Go and get it. The financial system is not designed to make this easy to understand. Pay slips are dense, tax codes are opaque, and the default assumption is that most people will never look closely enough to notice when something is wrong. This channel exists to change that. Every week, we break down one thing the financial world makes deliberately complicated, and we make it simple. Subscribe so you do not miss the next one. And if you want these breakdowns delivered directly to your inbox every week, the Sterling Exchange newsletter is in the description. Free, 30 seconds to sign up. I will see you next Tuesday.